Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday market webcast. Okay, we continue the lower band ride down. What we're seeing now, though, especially after the Fed yesterday, you've seen multiple attempts on the daily chart to take out the 200-day exponential moving average. It's holding as resistance. At this point, it is established resistance. Whether you want it to be or not, it is what it is. It's resistance. And until you get a close above that area, and then you see a couple of days working and building higher lows above that area, this is not only on the short term, but certainly on the intermediate term, a sell rallies tape. And I think that continues to bear out. So look, you got a bounce here. It'll be interesting to see how these bounces are sold. So you've got the lows from Monday, okay? You had a higher low yesterday, higher low here. This was the Fed, and they knocked it down, but they've taken out the highs from the Fed. Now, they've pushed it. I'm sorry, this is the Fed. They took it back down, but they didn't take out this higher low, okay? So the Tuesday close was controlled by the bears. The Wednesday close was controlled by the bears. And you're continuing to see, resistance up top. You've got 2 days left this week. I do feel pretty strongly that 42.1275 has got to at least get tested, if not get broken this week, if the bears are really going to head into next week with, people really thinking, okay, well, we're in a little bit of a different situation here than we have been in the past, couple of years, really since lockdown COVID, right? We got about 3 hours here at the hourly mid-band. You got VWAP coming in 43.12 half. Hourly mid, you can call it 38. Daily pivots up at 59.75. It's not as volatile as it was a few days ago, but it is still very volatile. I always judge it by the number of handles on the right side of the live chart that we use in the room. Typically it's 2 handles. Lately it's been 10. And when it's 10, things that are moving 30 handles act like they're moving 3 handles. It's very fast. It's very tough for a lot of people to trade, but the volatility is tremendous. So, just one example from yesterday. 44.25 off of the Fed was tested a few times. After they made the initial high, we were shorting against that area. Shorted it once, 10 handles, 30 handles on the middle, took it out. Then they did the same thing, it took it out again. And then finally it broke, and it really was an effortless 100 to 110. The total move was like 125, but it was really an effortless 100 handles down. So the volatility at times is still just absolutely off the charts. It is nuts. And because it's nuts, you have got to respect risk. You've got to respect risk. You have to stick to your risk rules. You can't be making deals with yourself. You certainly shouldn't be oversized. You shouldn't be trying to get it all back with one swing. Just all the cliches. All the cliches are based upon stupid stuff that traders have done over the course of time and continue to do on a daily basis out in this world. Let this thing trade. There are really great moments where this thing is giving up a ton of handles. Don't get greedy with it. Take what you need, get to the next day. It's been producing solidly, with middles and runners and things like that, over 100 handles a day. And we really haven't seen this, like I said, since lockdown COVID. Is it going to go away? Of course it is. What the tape has to do right now, and I think what it's trying to do in its own way, is figure out where are we comfortable consolidating. Is that the 4200s? Is that the 4300s? Is it the 4400s? Where are we comfortable consolidating? And once it decides where it's comfortable consolidating, that's exactly what it's going to do for a few days. These bands are going to come in. We're going to get some, we're going to get some chop. This thing's going to exhale and take a little bit of a break, and then figure out what it wants to do for the month of February. But respect risk, enjoy the vol. Understand, though, for a real hardcore bear move that's really going to knock people's socks off, you got to really take out 42.1275 this week. What would probably be the healthiest thing if you're a bear and you really want the thing to go down, the healthiest thing would be, retesting solidly something like the 9-day, and then over time retesting something like the 100-day and bringing that in here. But if the answer is we're going to hold the 200-day every time it goes up to see it, then the answer is okay, then this low at a minimum needs to get tested, if not broken. And you go from there. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Be good. I will talk to you guys tomorrow.